Hi, everyone. Welcome to the live trading webinar. Let me know you can see and hear me. Welcome, CJ, Jeffrey, David's here, Nigel, John, Simon, Peter, there's a whole bunch more of you signing on as we begin. Grab a comfortable chair, pen, paper, and you're going to need a camera phone as well to take images of some of the fantastic slides. Amita, Theo, Richard, Shepstone, Havinda, Jose as well. Welcome one and all, and let's kick off straight away. I'm going to share my screen with you because we've got, as ever, a lot to cover. Let me know where you're from as well and whether you're a beginner to trading, stuff you'd like me to especially cover as well. Okay, what we're going to deal here is we're going to explore something which I think is quite revolutionary in the world of trading. This is something that can change the way you trade forever. And what I've done is taken it from the world's leading traders. See that book, The Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. So when I was a student, I met 10 of the world's leading traders, and the Financial Times published the book. And I met them because I wanted to be a trader. And I thought, if I want to be a trader, I better learn from the world's leading traders. So we're going to take everything they taught me and we're going to put it into this webinar. So in the next 45 to 60 minutes, you're going to learn everything there is to know about trading from people like the man in the rich list, David Kite, floor trader on Life, Bill Lipschutz, former global head of foreign exchange trading at Salomon Brothers, the world's largest forex trader and hedge fund manager of the year a few years ago. So you're going to get all of that. Plus, I'm going to give you a downloadable copy of that book completely for free for being on the webinar. And do you see that? The international bestseller, Trading Online. I'm going to give you all the best information from there as well. So that's a hell of a lot of stuff coming your way in this, which is why you want to grab a comfy chair. And hello, Simon from Devon, David Chepstow. Like I said, let me know where you're from. We're going to do some polls as well. So let me put that poll up as well. And this one's about the FTSE. We're going to follow on from yesterday's trades, and I'm going to show you where things are at the moment. This is what we're going to focus on. I'll talk about what this free live real-time platform is in a moment if you don't recognize it, and it's broker independent, which is good as well. And these are the trades we're looking at. So take a picture of those because they're the ones I'm looking at the moment. They're the ones which my team has said have the smoothest movement, which makes it easier to buy and sell and get in on the trends as well. So everything from euro dollar to the FTSE, the S&P 500, Microsoft, Tesla, Disney. We're going to cover them all in this webinar. DAX, Bitcoin, cable, sterling US dollar, Google, Nvidia, the Dow, Apple, Amazon, JP Morgan, which I own as well. And we've got another Amazon one there. And by the way, since yesterday, for instance, that was JP Morgan, which we were long. We're long on the 6th of June, long again on the 7th, and then it's given us a short and currently short on that. So how do you do that? How do you make money trading? And that's what this webinar is about. It's how do you make money? First things first, none of this is individual advice because I don't know you personally as well. Spread betting or CFDs, I will cover that as well. And in a sense, they're identical. All that's different is in actual fact the legal contract at the back end. And of course, you don't pay capital gains tax on spread bets. But in actual fact, they're identical. If you place a CFD trade and a spread bet trade, do it with a broker, do it with a minimum amount of money, and you'll see the outcomes are exactly the same. Okay, so that's that. The other thing, I've been in the trenches of trading since I was, like I said, at university. I trained as a lawyer. I didn't grow up with a silver spoon in my mouth, so I had to make all this money myself. I've seen the highs and the lows, and I've learned from some of the greatest traders in the world, like, as I said, Bill Lipschutz. They were all in the book, and without them, I wouldn't have learned. So none of what I'm telling you today is anything I've invented or created. It's things that I've copied from the people that I interviewed and I met, and it meant that a few years later, I was able to set up my own hedge fund because guess what? When you learn from people like Bernard Opperty, who runs a $2 billion hedge fund, you get to learn how to make money because that's what they teach you. And you know, people say, well, why would they tell you anything? Well, I didn't put them out of business. They're still going strong. So I've never understood that sort of, why would they ever tell you? Well, they were going to get interviewed in a book, and the stuff's in the book, and I'll let you download the book at the end as well. The most important thing I've learned is that there's always room for improvement. And that's what I'm going to show you. So whether you're an experienced trader or whether you're new to all of this, there will be room to improve your trading. Or whether, as my wife said, you know, what are you going to talk about in the webinar? And then she told me what I should talk about, making money for a beginner. And she said, if you could convince me, you can teach anybody. And I said, okay, well, I'll pretend you're the end person. So yes, we're going to talk about CFD, spread betting. And it doesn't matter what instruments you use. You might use cash. You might buy the actual instruments, Microsoft stock, using cash and actually buy the stock or the leveraged product. Doesn't really matter as long as we're buying low, selling high, or selling high, buying low. That's what this webinar is going to be about. And as I said, one of the key people, so you know at the beginning of this webinar, where am I getting all this from? Well, where I'm getting it from is people like Bill Lipschutz. His boss was Warren Buffett at Salomons. When I interviewed Bill, he was one of the first people I interviewed. I met him both in London and in New York, where he was global head of foreign exchange trading, and he was in London because obviously he was in charge of the team in London as well. It was extraordinary because obviously you're talking about one of the biggest traders in the world, and you're sitting there, and he knows I was there to, basically I was a student, so he knows I was there to learn how to make money. And it took a few years to raise the capital and then set up my own fund. So that's one of the people who taught me how we're going to trade this. How do we know when to buy? How do we know when to sell, those yellow lines? How do we know when to add to winners, those dotted lines? And in fact, how do you know when to click that blue buy button and that sell button as well? That's everything that we're covering. So, and we're going to look at what positions we've got at the moment and my views on the markets as well. The kind of trading we're going to be doing is this. It is going to be trend following. Notice how, and this is, I've taken a slide from Winton Capital. It's a multi-billion-dollar hedge fund out in Hammersmith in West London. It's one of the largest in Europe. And this is one of their slides. And it explains exactly what we do as well and what some of the biggest hedge funds in the world do, like AHL, like Aspect, like Brevin Howard, like the one John W. Henry, who owns Liverpool Football Club, does as well. It is trend following. And we don't get in where the trends are at the bottom. And I'm going to teach you all of this and give you the first strategy we used in the hedge fund, which is the oldest one we had, which is the one Bill Lipschutz taught me, David Kite all taught me, was that momentum trend following one, because it's the best and easiest one for private investors. Okay. We don't get in where the trend starts because we can't see the bottom of the market. We don't have a crystal ball. Nobody does. We end up getting in after a bit of a lag. And this is from Winton, and this is how they explain it to their clients. And the reason I wanted to use their slides rather than mine is because I think they have more authority than I do. They've got about, I don't think it's 350 billion, but they've got multi-billions of authority. And you might, with me, you might just say, well, why should we trust you on this? Well, actually, because I just copy what the best people are doing. It's all part of my campaign to teach 1 million people how to know more about the markets, invest better, trade better, because the markets, as we've seen, rule our pensions, rule our mortgages, rule our energy costs. So you need to know more about these things. Now, my reasons for doing all of this initially were funds, was just money. I was a poor student and I thought, you know what, I want to trade. Later on, it became fun, freedom, fulfillment, philanthropy, and now increasingly draining the swamp. There is just so much BS on Instagram and TikTok about people who haven't got a bloody clue what they're talking about. So for me, it became more of a campaign as I got older to drain that swamp of people who are just clueless, and there's a lot of them. Your reasons for trading are these. I know this because that's what people feed back to. Side income, eventually leaving a job. Some people just want to, in retirement, they want to learn what to do. I've got everything from time poor, cash rich professionals to retirees, to people in their 20s, to people in their 70s, typically on a webinar. You feel free to put your ages in here as well. Steve, CJ, David's are here. Nigel, John, Simon, Peter, Mike, Josh, Sammy, Mike. Got 2 mics. In there. Now, the problems we're going to solve for you in this webinar is how to trade better for those who already know how to trade, which brokers you might want to use. We'll do that in the Q&A. When to buy, when to sell, and that's going to be part of my process that I'm going to teach you. Time saving when you're trading, because most people, what they want to do is they want to be on their phone constantly, and that's what the broker wants you to do because they get a kickback every time you lose money. And the more often you're on your phone, the more likely you're going to trade out of 2 emotions. Out of arrogance because you've made some money, then you're going to do low quality trades, or out of chasing losses because you've had some losing trades, and then you're going to, again, make low quality trades. So I don't want you constantly on your phone. We're going to give you a business plan, which has the added benefit it's going to save you a hell of a lot of time as well, because there isn't actually a direct correlation between how often you smack the keyboard and how much money goes in your bank account. It's actually more an N-shaped curve. In other words, if you don't trade at all, you don't make anything. And if you trade too much, you don't make anything. But in the middle, there's an optimal amount you should trade. And I'll show you that in the business plan and what that should be. And I'll give you the mathematics behind it because I'm very much data driven on these things. So you'll get that as well. And starting with business plan, let's just start off with some of the important numbers we're going to look at. And we're going to look at these individual trades and how do we decide? And the first things you're going to do is I want you to remember these numbers. So write them down or take a photo of them. And what it is for 15 minutes a day, before and after work, so you can do 30 or you can do an hour at the weekends. Okay, let me just pull this in. What you're going to do is you're going to scan 12 to 20 instruments. And I've given you a start on these instruments here. And you're going to scan them to see where a trend is starting. Now, how do you know when a trend's starting? We'll come to that. That's called the entry. You're going to scan it for that. Okay, so that's where those numbers come in. And then I'm going to show you later on in the business plan why those numbers. So don't ask the questions yet. All will become clear. 15 minutes before and after work, or 1 hour, you're going to place about 1 trade per day or 5 on a Monday for the rest of the week. And I'll give you the idea of durations because we're going to focus on 15-minute, 30-minute and 1 hour bars. And even if you've got a day job, you can do that. You can leave the trades and leave the order with the brokers, because even with a day job, as you'll see with the FTSE here, the 15-minute bars, you can see there was a good buy there at 2nd of June, gave us a good return, and then we had a sell signal just before the market fell, so that was very timely on the 5th, and then it just completely collapsed, which made lots of money. And then on the 6th we had to go long again, and then on the 6th later in the day, well, that turned out to be flat, that turned out flat, that turned out flat, that turned out flat. So you had about 1, 2, 3, 4, 5 trades which didn't do anything. Okay, so if you want to know, well, how does it look when it doesn't work out? Well, when the market's not trending, that's what it works out like. When it is, big win, big win, big win. And those big wins, 3 big wins, 4 nothings. So you've actually got a majority of trades which delivered you nothing, and yet you made money. So remember that. And so with the 3 big wins, how do we maximize that? How do we get those returns? That's also something which is coming up in this. And how do you know when to enter? How do you know when you get all this data, which is live, real time and free? How do you know that was this was an entry point? Why should you have entered there when the trend had already started? And because we don't have a crystal ball, we couldn't get in at the bottom of the market because we don't have a crystal ball. That actually worked out near the top of the market, but that was just luck and coincidence rather than we had perfect foresight. So let's break all that down, and you'll see that the trades last anything between a day to a week. Well, Alpesh, if you're not in front of the computer, how can you do that? Because you leave the orders with the broker, and I'll break that down for you as well. 1 screen is all you need. It works out at 20 trades per month, and I'll give you the breakdown of the business plan as well. Neil, I don't think it auto-generates subtitles on this. I'm afraid. I really do apologize about that. But I think when we do a recording, if we do a recording, that will have subtitles. Sorry about that, Neil. Normally I would, I'd accommodate whenever I can. Most people are looking to make between 500 to 1,000 a month. That's sensible. When we polled people, I'm glad they were sensible. There were some people who were crazy who wanted to make 10,000 a month. What I'm going to teach you are the basics, so that once you've learned the skills to make 500, and it can't be guaranteed every month at all. It could be 2,000 in a month, or it could be negative in a month. But once you have good months, you save the excess money for the times you have bad months, and that irons out the ups and downs. Okay, once you've consistently learned the skills to make 500 a month, then you've got the skills to make 1,000. Then the business is scalable from 1,000. If you got the skills to make 1,000, you can make 2,000. Got the skills to make 2,000, you can make 4, and so on. So it's the skills we want to focus on by first having a demo account, because you don't need live cash to make those. And if you really want to use live cash, use the smallest. Let's say you took a broker like IG Index, take the smallest amounts you need to trade, which might be 0.01 pence or cents per point. I mean, that's minuscule. Okay, so even if you're wrong, you might lose £3. So you can do that. It's like playing poker with matchsticks. Now, of course, you'll have seen figures like this. I don't know this broker. I don't endorse them. I don't know them from Adam. But these are the kinds of numbers people see, and they think, oh, I want to trade because of this. Oh, I'm going to make my riches. No, we're going to focus in this webinar on 500 a month. Not guaranteed, because nothing in trading is guaranteed, but the skills which might get us there without any guarantee. Yeah, I know. Talk about not getting rich quick. And no guarantees. Thanks, Alpesh. Well, you can leave now if you wish, but this is what realism looks like. The important point is it does not matter what you buy and sell. I don't care. Look at these instruments we're looking at the moment, and we're going to go through all of these. Okay. We're going to look at all of these, and we're going to look at capital, Jaden, and the business plan later on. I think you signed up yesterday, didn't you, Jaden? Thank you very much. We're going to look at the plan in a second, the business plan in a second. Okay. So 52% of you think the FTSE is going to be higher by the end of the year. Let's see what you think. Well, let's look at your risk capital for the moment. And thank you, Jane. I'll answer that question in a second. And Neil, the answer is yes to that question. So when we're looking at this, I don't care whether I make my money on FTSE or Euro dollar or whatever else. I'm like a supermarket. Most traders are. We're buying low, selling high, or vice versa. So let's look at NVIDIA. Okay, did I care that that trade on the 17th of May was a long trend? For a few days, it looked like, oh God, we're actually losing money on this. What do we do? What do we do? And then boom. Did I know it was going to shoot up? No. Did I have inside knowledge? No. What we had was there was some reason to buy, and I'll tell you what those reasons are. So you've got the strategy, and then we bought. And that's still a long trade at the moment, even though some of it's come off. Okay, so that being the case, I didn't care whether it was NVIDIA or whatever else, because money is money. Secondly, I don't believe in subscriptions. There's always a conflict of interest if somebody in trading is selling you a subscription, because the conflict of interest is they can't ever want you to be self-sufficient. Otherwise, they'd lose their subscription. So I don't like it when software companies say to you, oh, there's a subscription. Even worse, when they say there's a subscription, please use our brokerage, our broker partner, because we've got a great deal with them. It means they're getting a kickback on your losses. So they've actually got a real conflict with you, which is they need to see you lose, my friends. Okay, so do not go for that. Another warning: avoid any services tied to specific brokers, and references must come from industry leaders. Not just Mrs. Smith from Croydon said you're brilliant, but actually who are the industry leaders? Okay, like the global head of foreign exchange trading at Salomons, or the chairman of the Chicago Board of Trade. Does he say, yeah, Alpesh's trading strategies are brilliant? Okay, and I'll share some of those with you later on. Teachers should be the world's leading traders. My teachers were. You better make sure your teachers are as well, because it's your money. Nobody cares about your money as much as you do. I don't care about your money as much as you do. Okay, so you better make sure who you're learning from, and which is why I spend some time at the start of the webinar saying, well, I'm going to give you the book to download so you can check the credentials, and the Financial Times already did it when they published it, of why the best traders in the world were teaching what they were teaching. They're my credentials, and I'm just telling you what they taught me. Okay, now trading, two things you got to do: when to buy, when to sell. It's that simple, 50-50. So how come from these warning signs from various brokers, how come then that when you look at these warning signs, what you see is CMC, IG, Saxo, and I don't know which order of those three are in, and those numbers might have changed now. 61% lose money, 66% lose money, 66% lose money with those brokers. Okay, and that's what we're going to, when it's a 50-50 thing, buy or sell. So we're going to see the mistakes that private investors make. They're their own worst enemies, and they get in their own way. That's why they lose money. I mean, of course, brokers screw them as well, and we'll talk about that in the Q&A. Brokers and all the bad things they do, we're going to talk about in the Q&A as well, and I'll be on your side on that. And in actual fact, what I did, okay, Jaden, no worries at all. What I did, as all that knowledge about brokers and what they do, that was in my first book about 20 odd years ago, and I've written 18. So I'm going to share that in the Q&A in this webinar as well. You're going to get that one-to-one and answer your questions as well, so that you can outsmart them. I know brokers really well, and there are ways of outsmarting them, and let everybody else lose money with them if they want. The good thing about trading and those statistics is this: trading is a business. It is the best side gig. And if, like you, Jaden, you're relatively young, fantastic. You've got a business in your back pocket. When I was young and I was training to be a lawyer, I wanted two other side gigs. They weren't called side gigs back then. One was earning from writing, because I just thought it was the best thing. And I did become an author and a Financial Times columnist because I just thought it was the greatest freedom. Indeed, it then became earning from content, like TV presenting at Bloomberg TV as well. And the other thing I wanted was earning from trading and investing, because guess what? It was also something you could do alongside your day job, and it meant my money would work harder for me. And for whatever reason, I realized that was going to be important to me in later life. So it's been fantastic. Like, some people have property. I'm rubbish at property, by the way. I've never done it. My family does. Others have that as a side gig, don't they? So this is the best business in the world, because you don't need a lot of money to start. You don't need warehouses and staff and insurance and all the rest of it. And the odds of success are far greater than in other businesses. Other businesses, 90% of businesses fail within 3 years. Clearly, as you can see there, 30% are making money. So let's make sure we take the effort to get into that 30%. And if you get the education to do it, it could be useful. You don't have to do it full time. You don't have to be dedicated to making bazillions out of it. You might just make a few hundred in a month, and it just tops things up. Whatever it is, I, at least given that it's my life's work, at least want people to know about it. And if at the end of it you say, this is not for me, Alpesh, that's perfectly fine as well. I sometimes get people, there was a guy yesterday on the webinar yesterday, and I said to him, look, I don't think it's for you, because he was umming and ahhing. I said, listen, mate, what are you going to be like when there's a trade coming up? You're going to be in mental anguish. If you're going to be mentally anguished, don't do it. Go take a Zen Buddhist retreat instead. This is what trading is. So we're going to get short signals like this. How? When the momentum and the trend is lower. So let's say you sell at that high price and you buy it back cheaper. So you've got a profit, because the difference between the buy and the sell price is your profit, whether it's a CFD spread bet or just an options trade, whatever it is, doesn't really matter. Now, you get the same data. This is sterling US dollar, 1 hour bars. You get the same data, your trader 1, as a high net worth, that's trader 2, because the prices are the prices pretty much, okay? Or trader 3, which is an institution. An institution might get slightly better price than you, slightly, because they're trading in bulk, but it's not going to be like tens of dollars different, is it? Obviously. And you both, let's say, using the same data, make the same decision at the same time for whatever reasons you sold at that time, or you bought here, which is a bit easier to understand. You bought and it kept going up and you made lots of money and you thought to yourself, stonking rich. Now you might make £500. Trader 2, the high net worth, makes 5,000. Trader 3 makes 5 million, which is the institution. Why? That's so unfair. Yeah, because the rich get rich because they've got more capital. The only difference between you and them should be capital. It shouldn't be you can't access the data. It shouldn't be you don't know what to do, because I can teach you that. The difference should be, well, they just happen to be richer. Okay, because then that's a scalable skill you can learn. And a scalable skill is the essence of any success in anything. And so let's start teaching you some of that. And by the way, when we talk about instruments, there's so much to choose from. We're just going to pick 12 to 20. But you could have commodities like palladium and sugar. You could have Ripple, Dogecoin if you wanted it. And I'll tell you which ones I prefer in a second. You could have the Dow. You could have Litecoin, Ripple. You could have European stocks, Commerzbank, US ones like Cisco, Citi, Disney, eBay, or Forex currencies, whatever it is. Mine favorites, they're on screen. Take a photo at the moment. Now, why haven't I looked at all of these? I don't have time to look at all these, but actually, members of my team will be focused. For instance, some will be focused on Forex, some will be focused on commodities, and so on and so forth. By the way, when it comes to currencies, not just the things you see on screen, the ones that I prefer are major versus minor currencies, or minor versus minor currencies. And to work that out, a major currency is either the yen, the euro, sterling, or US dollar. Everything else is a minor currency. And I prefer trades which are major versus minor, or minor versus minor. And why? Well, because the trends tend to be smoother. Okay, if the trends are smoother, it's easier to get on the back of a trend. Typically, this is what we're looking for. By the way, this is not typical what you're seeing on screen. This was the last month of 2022, and I chose it, and admittedly, it's not typical. I just chose it randomly because somebody had asked me, what does a typical month look like? And they asked me in January, so I said, well, I'll take last month. This is not typical. This is better than typical, okay? Just so you know. This is the S&P 500. And we had a short trade, didn't work out. We had a long trade, didn't work out. We had a short trade, didn't work out. Oh, you're rubbish, Alpesh. Yeah, well, wait a minute. Then we had a long trade, lots of money. Thank you very much. We had another long trade, didn't work out. Had a short trade, lots of money. Thank you very much. A long trade, thank you very much. Perfect. Short trade, thank you very much. Another short trade, good and good. Okay, so was that typical? No, because normally we don't get 1, 2, 3, 4, 5, 6. What is that? 6 winning trades pretty much in a row. There was a gap here. Pretty much in a row. You might get 3 wins and then a losing trade and then another 3. It doesn't typically happen like that. It's a bit like a coin. If a coin's 50-50, heads or tails, you don't say if you get 10 heads, oh, I'm the world's greatest coin tosser. Oh, I've got a skewed coin. No, you had a winning streak of heads. And it's similar with trading. What we want to make sure is in any grouping or any month where there's 10 odd trades, I think there's 10 on there, we want to make sure we get some of these big ones. Okay, and if we capture those and the rest are just small flat trades like these, then we've made money. It's simple as that. So what's the clue? The clue is this. The difference between rich and poor, and the difference between a billionaire hedge fund manager and a non-one is simply this. And the difference between me and you in trading is this. My trading statistics look like this. Not just mine, Winton Capital's, all the biggest fund managers, all the profitable 30% with spread betting firms. How do we know? Because we've looked at their data. When I wrote a book about a few years ago on spread betting, we took the data anonymized from several brokers and we broke it down and asked the brokerage, give us the data, so we knew which instruments, because we wanted to know which instruments are easier to make money on than others. Is it more profitable to go long or short? Were people who are holding for a shorter period making more money than those holding for too long? We wanted an edge, basically. Why would the broker give us all that data? Because we're writing a book. If you're writing a book, people give you stuff, you know. It's like academia. You just say, oh, okay. So they gave us all that data, and I'll share those findings with you. You know, were men better than women? Were there certain times of the day that you were likely to make more money? Were there certain instruments? Isn't that an edge? So I'll share that with you as we go along in this webinar on what the advantages were. But the thing we found is that the profitable 30% of traders with brokers were doing the same thing, whether they realized it or not. As hedge fund managers, they were doing this. And they would have about 15 to 20% of their trades, which were big wins. Why aren't they all big wins? Well, two reasons. One is nobody has a crystal ball. And secondly, if the market doesn't move, it doesn't bloody move. You can't take a big win if the price doesn't go up. Okay, so that was that. And the vast majority were small wins or small losses. Why? Well, because trends you get in with all goodwill and intention, and the market decides to go the other way. So you have a small win, a small loss, and they actually canceled each other out. The difference between my results and yours, for those of you who trade at the moment, just end this poll on screen. The difference between my results and yours is one thing, and one thing only. Other than that, I've got a strategy and you probably don't. I've got a business plan and you probably don't, and so on, which I'll remove those things that you lack by the end of this webinar. The big difference is this: I don't have big losses and you will. You have a strategy or process or just good luck, you know, where you end up just like doing what I do. If you broke your results down, I bet they look just like this, except you've got a bunch of big losses. And I don't mean the trades you've exited. Okay, I'm talking about the ones that you're still holding and go, oh, no, Alpesh, I win 99% of the time. Oh, really? What about the positions you've got open? Oh, yeah, I've got huge losses on those, but I've not taken them, so it doesn't count. No, I mean, without the bullshit, mine's going to look like that. Yours isn't. And I know I can guarantee that because of statistics. You can't escape mathematics and you can't escape gravity. So how do we make sure you don't have big losses? That's what I'm going to teach you and show you as well in this. And we're going to do it this way. It's Selma. Chair out of the way. It's Selma. Everything that I learned from the world's leading traders, I put into an acronym because I love acronyms. I did a TEDx talk and I put an acronym on the screen so people can remember stuff. So this is what essentially the leading traders in the world, it broke down to: where to put the stop loss, when to enter, and we're talking about trend following. We're not talking about arbitrage, and we're not talking about other types of trading. Okay, where to put the entry, where, if ever, to have a limit order or take profit. We'll come to that. How to control your mind, because 1 minute you're going long, 1 minute next minute you've got to go short, or we've got one student who's a new student who is just too analytical, and we're getting him to do some Buddhist meditation because the guy needs it. Good chap, but just goes mental looking at the screens, and a bit like the chap yesterday, Santiago, we had on yesterday, and it reminded me of that. It's just too much on edge. I mean, I wouldn't hire him in my firm because the guy's just going to he's going to look at a screen like this, and he's going to get, let's say Tesla, he's going to get that. So he's going to go, yeah, but I read something here and I read something there. Or he's going to see it go up and then fall back. He's going, it's got that, what do I do? What to do? Instead of just listen. And I'm going to teach you this. Replace the trade. There's the stop. There's what we're going to add to the winner. Now stop staring at it and go off and, I don't know, go sit in the garden or do some meditation. So mind, we're going to control by having a process. Process is the best way to control the mind. You have a checklist, you're really calm. It's like pilots in a storm. Why do pilots in a storm not get, and I got a pilot's license, why do we not panic? Well, we don't panic because, well, they wouldn't let me into a storm. I'm not rated for that. But if I was in a storm, I'd have a checklist. That's what we're going to have. How much money to put in? Well, we're going to put the business plan. I think, Jaden, you asked earlier how much money to get to the kinds of returns. You're going to see that in a second in the business plan. And when do you add to your winning positions? Those are the things we're going to talk about, and that's Selma. So let's do that. That's probably the most important, second most important slide, actually, in this webinar. It's the second most important slide in this webinar. So let's start off with number one. What I discovered from the world's leading traders and how we avoid those big losses, which is the big differentiator between me and you, or every professional hedge fund manager who's made millions and the retail client who hasn't, is first thing, volatility-based stop losses. In other words, more volatile the market, further away the stop loss. And by volatility, I mean how much is that moving up and down? That's just noise. On average, if that moves up, I don't know, 10 points or 10 pips, we'd call that noise. So you don't want your stop loss within 10 points of that, because otherwise it'll get stopped out by noise. You don't actually want it 20 points of that. If you put it 30 points away, it's too far away, and it's probably somewhere between 2 to 3 times the average noise. How do you measure that? Well, with experience, you do it by eye, or like us, use a computer system, or you might just use the 14-period ATR and say 2.75 times ATR. You can Google ATR in your own time, okay, average true range. But it's the principle that matters, not the exact number. 2's too little, 3's too much, okay? So it's a volatility-based stop. More volatile the market, further away the stop loss, so you don't get stopped out by noise. That's ingenious because it's bespoke to every trade. The next thing you do, we again get our computer systems to work it out for us. This is the tool we use to train our new members up in my firm. My firm's relatively small, even after all these years, sadly, because when we go for new capital, we're going after Goldman Sachs and before Morgan Stanley, and guess who the institutions give the money to? So although we've got people like Aegon, AXA, the big institutions, behind us, we didn't get billions of assets under management. We'll get there. But when that means we also don't hire people who we have to pay millions a year. We can't afford that. We can't afford that kind of wage bill. So we do a bit like Leeds United Football Club does. We grow them rather than what Real Madrid does, which is pay a fortune, or what the Saudis do, which is pay a fortune to get Ronaldo. So in the same way, we need to train them up. So we train them up. They might be 21 years old, straight out of university. They don't have to have gone to university, but they might be. And they're cheap. Then they go off and make lots of money elsewhere, and that's perfectly fine. Some of our students go off to the big banks and so on. But this is the important bit. We use this tool to teach them. And the other thing we teach them then is volatility-based position sizing. So if the stop loss is far away, money you put into a trade, and we'll talk exact numbers in a second with the business plan, is reduced. So you don't risk losing more money in more volatile markets. Get it? You don't lose more money in more volatile markets by having rules 1 and 2. Ingenious. Absolutely freaking genius. The third thing, which is ingenious, and I didn't invent any of this, it's what all the big hedge funds do. And you might say, oh, well, why did they tell you that? Why did they tell you that little secret? Well, is it really a secret if they're all bloody doing it? Because there's certain things which are just obvious. It's like tennis. What do all tennis players do? Oh, they wear tennis shoes. Oh, wow. Why did they tell you that little secret? Oh, my God, you're going to ruin the lives of all the tennis players. No, am I really? So that's how it works, okay? And they told us that. So the other thing was winners add to winners. And again, I didn't know this. I couldn't have guessed it. When I met Bill Lipschutz, I didn't know that. For all I knew, he was going to say to me, hey, you want to get really rich? We take a few really big, massive bets. Or we've got big balls. We do big balls, big men kind of stuff, because it was mainly men. And we just get rich that way. And he didn't. I was shocked. They actually, all of them said, what we do is we take a small position just in case we're wrong, and it goes to our stop loss. We take that small position, and then what we do is we then add, when it goes to this dotted line, we add to our winners. Winners add to winners. Write that down. Winners add to winners. And I said, what if it's a losing position? He goes, well, losers add to losers. We never add to a losing position. And he's not the only one who said that. It's, it's been said before. And if you're so afraid, by the way, of okay, does that mean if you know this that you can destroy their livelihoods? Look at what the turtle traders did. They didn't remove Richard Dennis's livelihood. Far from it. And none of these traders who I interviewed for my book are out of business. In fact, Bill Lipschutz has gone on to set up his own hedge fund since I wrote this book and became hedge fund manager of the year a few years ago. So actually done even better than he was at Salomons as global head of Forex trading. So there you go. So what we did is we took that. So how do you know where that dotted line should be? The A in Selma, adding to winners. Well, just as far away that stop loss is, that's over there. So these are the principles. Okay, don't forget Selma, stops, entry, we're going to come to, limit order, which is when do you take a profit, and I'll come to that in a second. Money management, how much money do you put in? We'll do that in the business case. Mind, how do you control your mind? Well, you follow the signal or your rules, which is to link to entry. So we'll come to entry, and adding to winners. 4, you make that stop stepped. Okay, it's a trailing step stop loss. Ask your broker what's one of those. What it essentially means is when this price reaches that level, only then this moves up. And you can just put those orders and then leave it with the broker. So you don't have to be watching this all day long. You go, right, I'm buying at 132. The stop loss is, at whatever level, and that's how you do it. Okay. It's at that one, and it's at that one, and this is at the top level. It's as simple as that. That's how you do it. Okay, step, stop, loss, and we can talk about any of this in the Q&A if any of it didn't make sense. So that's 4. And number 5, momentum-based entry. So we'll talk about entry. Now, if you're a total beginner, and some of you are, so if I was talking to my wife, I'd say to her, look, sweetheart, keep it simple. When you get the entry, make that a fixed stop loss and make that a fixed take profit or limit order. Simple. You tell your broker and then you go away. Okay. If you are more advanced and more experienced, then you add to your winners and you have a trailing step stop loss. Simple as that. Okay. By the way, can I tell you some technology we've spun out of my hedge fund? I always ask people's permission. If you've been on my webinars before, you know that I ask your permission. You don't have to stay for that, but it's the technology we spun out of the hedge fund because we think it's $1 billion tech. By the way, that's euro dollar. You guys are lucky for me because that's just shot up, and that's live. You can see it now. So we had that long position from, we had that long position, and that has just now shot up. I don't know why the euro shot up or why the dollar has collapsed, but that's what's happened. So there you go. You can see it. You can see where that was. We added to the winners there, and then it's just continued going higher and higher. So that's good. We'll keep an eye on that one. And is it the US dollar, which is the problem? Yeah, it looks like the US dollar is what's falling. Somebody look on the news. Now, as you can see, I'm not aware of why it's fallen. We're trend following. That's what trend following means. We don't care about macroeconomics. I've got a master's degree in economics from the world's #1 university. And I'm telling you, I didn't look at macroeconomics to make that trade. And that's shooting ahead where sterling's getting weaker and the dollar is getting, sterling's getting strong and the dollar's getting weaker. So it's the dollar that's falling. And we had that long trade. And that's just a replication of the previous one. Okay, so that's where we are. And we'll come to some of the others in a second. Somebody can perhaps tell me why the dollar's collapsing all of a sudden. And there might not be a news item. That's even better. It makes life as well. Joseph, do you provide graduate schemes in that case? Unemployment claims. Thank you, Juan. There you go. Now, this is a really important live point. Do you notice we had the trades on and we weren't trying to analyze the markets? Because I don't want to do that. Do you want to do that? Probably not. You probably want to place your trades and go. That's why trend following is the easiest way of trading compared to anything else. Okay, let's take Microsoft. That was short from yesterday's webinar. Okay, you remember that from yesterday's, we were already short and it was falling yesterday and it's still short of things. Now we'll see when the US markets open. We won't be on this webinar, I don't think, when it opens, but at least it might go the other way, but that's where we are. Am I worried about Microsoft? No, I'm following a trend. I am not trying to outsmart the markets. Tesla, that's where we are on that one. Okay, we're not trying to outsmart the markets. We are just following a trend. What does that mean and how much might we be able to make? So let's look at that business plan. Okay, that's my mum, always makes an honorable visit in my webinars. That's His Majesty the King. I do not know why he's bowing to him, but if you had a picture where the King's bowing to you, wouldn't you use it? Hell yes. Forgive me. Business plan, is it all worth it? That's what Bill asked me. Okay, before we look at entries, the E in Selma, let's look at the business plan. Is it worth it? Now, Bill said to me, trading is like driving. It feels really complicated and difficult at first. Okay, jobs, okay, yeah, claims. I didn't know that. Do I care? No, it just moved things in the direction it was already going in. Interesting, isn't it? Interesting that it went in the direction of the trend, or rather the market interpreted it as dollar should weaken. So there we go. Now, there'll be lots of journalists writing about it. Who cares? Do you want to read that stuff? I don't want to read jobless claims. I'm sorry, I don't. I want to make the money and I want to go because I'm not studying to be an economist or a market commentator. I just want to make the money and go. And that's what I love about trading is actually it meant I could take all my books and just put them away. Trading is like driving for this reason. In driving, you've got multiple things to look at: rear view mirror, wing mirror, accelerator, brake, clutch, all the rest of it. Well, cars don't have clutches really anymore, the manual ones. Trading's the same. Stop, Selma, stop, entry, limit, money management, adding to winners. And it seems too complicated, but you learn to drive, you can do this. It's as simple as that. So don't be put off. And this is the business plan Bill did with me. Now, some of you, like Jaden, you're a student. This is a good time to do a business plan. Some of you might be retired. It's always good to have a plan. Okay, and it's a simple one-page plan, so it's not exactly rocket science. Okay, when you take a picture. And Bill said this to me. Remember, I was a student at university when I was interviewing him. He was global head of Forex trading at Salomons. He's in the book. You're going to get a copy of that for free to download in a second. And he said, let's do a business plan to see if any of this is worth it. And that's the mark of professionalism of the person. I mean, think about it. You're talking to somebody who knows you're there because what you're actually asking him as a young student is, how do I get rich? How do you turn my life into something which is going to be spectacular? And he knows that. And he said, well, let's make a plan. Okay, what's it going to look like? Is any of this worth it? That's professionalism. And he said, imagine the total maximum loss you'll ever have is 1% of your total capital. And I said, okay, fine. I'll go with whatever number you tell me. He said, imagine you got £20,000. I said, I don't have anywhere near that. I'm a poor student. I barely made the cost of the flights over to see him. And I was trading a little bit, but I didn't want to keep using all my money from trading any profits into expenses like flights to New York and hotels and all the rest of it. No, he said, look, 20,000 is what you'll eventually have. One day you'll have more money, presumably. I said, true. And he said, if your trading is good with just even £1,000, you'll go to friends and family and they might give you more and so on and so forth because you've proven that you can do it. And actually, that's interesting. So he said, assume you got 20,000. In any event, it's a business plan for the future, not about where you are now. I said, okay, carry on. Let's see. He said, therefore, your max loss per trade will be £200. In other words, the point being, at any point in here, okay, let's take, what should we take? Should we take Amazon? Okay, so Amazon's a short trade there. Okay, so the max loss would be, if that from that entry point, it hit that yellow line, which is the stop loss, I shouldn't lose more than £200. Actually, if I had 20,000, if I've got £2,000, I shouldn't lose more than £20. Fine, simple math, simple arithmetic, £20 loss, I can take that. Okay, and that's how we do it. I went, okay, 1% of that. Win-loss ratio. Assume you're a bit better than a coin because you're doing momentum and trend following. And we'll talk about entries straight after this. It's the next slide is entries. Okay. David said, but after the initial move, the announcements get reversed. Yeah, so you'll get another signal saying, now sell. It's trend following. It's momentum. Doesn't matter if it gets reversed. Doesn't matter if it goes up for whatever reason, falls for whatever. What do you care? As long as you're making money, buying low, selling high. And then if it reverses, you'll sell high because it'll tell you, now the momentum's reversed. Sell high and buy low. You don't have to guess it. You don't have to worry about it. The computer has to worry about it. You don't have to worry about it, do you? Okay? For the moment, you're just sitting there booking your next holiday, presumably. And if it reverses, fine. It'll hit your trailing stop loss. This one. That one down there will just keep moving up with the brokerage. Let's say that trailing stop loss, I don't know, it's somewhere over here. Or you might say, you know what, Alpesh, I'll just get out early. Thanks, mate. It's up to you. It's up to you. But I would just follow my signals. I usually just follow my signals. And you'll have seen, actually, speaking of following my signals, when I'm on the BBC, and here I was talking about oil with Sally, I will just talk about, and I've said this about my signals. This is how we do it. We do algorithms for trend following. That's how modern trading works. I said, I don't know what OPEC are going to do in a meeting. Do you know what they're going to ever come out with? If you do, you're lying. You're lying if you think, yeah, I thought they'd do this. I think they'd do that. No. You must be insider trading if you know that. If you've got somebody within OPEC, the criminal cartel that it is. So we're just following trends. That's what we do. Win-loss ratio, a bit better than a coin. So what does that mean? Well, it means our average loss will be £200, of course. That average will be 300 because winners add to winners. That's why we're picking a strategy where we add to our winners. So it gives us a slight edge. It means we can start slow. When the price moves up, we use those profits to buy another position. Winners add to winners. We add a winning position. So if we started off with, say, one position, we'd have two when the price went up because we had some profits in our back pocket on paper with the brokers. And we'd say, well, we'll risk those profits to make a bit more. That I didn't know that's a good strategy until the hedge fund managers said, well, that's what we do. It's what Richard Dennis does. It's what Paul Tudor Jones does. It's what AHL does. It's what Bill Lipschutz does, what John Najarian does. I didn't know that. How would I work that out? I could have traded for 1,000,000 years and never worked that out on my own. But because they told me this is what they all do, I thought, oh, all right. And then did a bit of game theory and statistics and worked out, actually, that just makes sense. Statistically, it just makes sense. So let's say the average wins 300. By the way, all these numbers I'll tone down. They're over optimistic, so don't worry. So you did 100 trades. Well, 60 should be £300 in profits. £18,000. Oh my God, I said to him, I want to leave university. Remember, I was talking to Bill at the time when I was writing the book and interviewing him. I said, I'll leave university then. This is more money I've ever seen. And he said, well, you'll have 40, which are losing money. Okay. I said, okay, but that's still net profits of £10,000 per 100 trades, more money than I'd ever seen. I said, this is great. I'll sit at home and I'll bang the keyboard and be a day trader. Remember, day traders were the thing when I wrote this 20 odd years ago, when I wrote Trading Online. And the reason it became an international bestseller is because day trading was a thing. I'll just sit at home in my underpants, eating nachos, getting fat and banging the keyboard, and magically money will go in my bank account. That was my dream. And sadly, it's not quite that straightforward, as he pointed out. I said, I'd be a day trader. Look, I'll do 100 trades per week. That's a lot of keyboard banging, smashing even. 50 weeks in a year, 5,000 trades per annum. Okay, that's what it works out. 5,000 trades per annum, £10,000 per 100 trades. That works out at £500,000 a year. I told him, I said, this is it. I'm made for life. Now I know the secret. I'm going to be just like you. And by the way, £500,000 a year was low money for him, but it's in the book. And he said to me, don't be stupid, Alpesh. I think if he could have slapped me, he probably would have slapped me at that point. He said, and what you should say, we're not even going to do 90% of that. We're not going to do 3/4 of that. Alpesh, grow up. We're not going to do half of that, a third of that, a quarter, a fifth, or even 15% of that. Let's say we did, and all of this business plan is over optimistic, and we did only 10% of our business plan. That'd be £50,000. That's still over optimistic. Even 10% of this business plan is over optimistic. He said, I want you to keep your day job, and it's good advice, and it's the same advice I'm going to give all of you. Don't, after this webinar, go out and resign. Don't do the big resignation. No, keep your day job, and you'll say, thanks, Alpesh, we were planning to. Let's say you did 100 trades per 6 months. You know what that is? 1 a day or 5 a week. What did I tell you earlier on? Our business plan, we're going to do 5 a week. Why only that? Again, I'll explain why. Caution is good in trading, and being the tortoise is good in trading, and never the hare. Okay, 100 trades per 6 months is 200 trades per annum. I'll also show you on here some of the students we've got a minority who've gone on to make millions, and I'll show you the video interviews with them as well on this. I say a minority because not everybody goes on to bloody make millions. I wish they did, but it all depends on how much time they devote and how much capital they've got. But we'll talk about those students. The point is that minority, what did they do? Okay, what were the ones who were making ridiculous sums? What did the majority do who make fine, fair enough sums? And I'll go through those numbers with you. Okay, and what's the difference, and how do you get from one category to the next? A bit like when you're at school, you say, okay, miss, how can I get the top grade in maths? Or, hey, how can I just pass? Some of you want to be A grade students. That's the top 10%. Some of you just want to pass, which is the majority, 80%. And some of you will say, thanks, I don't even want to study anymore. That's 10%, bottom 10%. And that's fine. Okay, and I said, I want to be a day jobber. Well, he said he would be a day jobber. And that would be £20,000 per annum. Well, that wouldn't be 10% of the business plan. It'd be 4%. Okay, well, that's still over optimistic. 4% of this business plan is over optimistic, because I said our target is about £500 to 1K per month, because that's the difference between paying down your fees or your rent or your mortgage and not, or your energy bills or not. The difference between rich and poor for most people isn't millions. It's actually about 500 a month. Makes a big difference. Now you might say, well, no, I'm rich actually. I want to do more. That's fine. If you're a high net worth watching this webinar, you'll just start with larger sums, and that's fine. But on the whole, for most reasonable people, I would suggest 500 a month, and there's no guarantees of that. Some months you make more, some months you make less. So we want to average that out. So even 4% of this business plan is over optimistic, because 1,000 per month is what we're looking at. So about 1.8% of this business plan is what you're after. And that, when I looked at it, it occurred to me, that's a good business plan. Because if by just hitting 1.8% of it, I hit my target, then everything else is upside. Everything else is cream. Everything else is overachievement. If you've got a business plan where you've got to, in order to make a living, get it right 100%, you're going to be screwed, because the chance of you hitting your business plan 100% pretty rare in the world of business, which is why 90% of businesses fail within 3 years. And this is exactly why so many people at trading, i.e. 30% who haven't even done my webinar or been educated, just the mass public, make money. 30% of them make money. And they've never had any bloody training in their life, ever. Certainly not from a hedge fund manager. So the odds actually are pretty good. And when I first wrote this, the odds were actually, I think they were even better back then. But brokers caught on and made it harder because they wanted to make more money and got greedy. And I can tell you about that in the Q&A. So if that's the case, then you should ask the same question I asked Bill. Why isn't everybody rich then? Okay. And he said, bad teachers, bad mentors, bad strategy. So let's look at the entry, or the E in Selma and strategies. There's my mum again. To improve that, 100 trades per 6 months, 200 trades per annum, £20,000 per annum. Wrong. Remember what I said? It's 500 to 1K per month. 1K per month. By the way, that's an old photo. Somebody asked me the other day, one of my students said, oh, have you still got the car? And I said, no, got rid of that ages ago. For a start, I've got a kid. I'm not putting him in a nice car. I've got a £100 bicycle now. Welcome to middle-age freaking having children. I love my son, but I wouldn't let him anywhere near anything expensive. £20,000 per annum, no, 1K per month is what we're after. Okay, momentum trading is this. We are that guy. A trend follows. We are riding the coattails of the person who starts the trend. That could be Mr. Market, or it could be Goldman Sachs. We are not trying to get in front of a trend and try and work out where it's going to go. We do not, unlike Goldman Sachs, have a ream of analysts. We can't afford them. I can't afford them. You can't afford them. Or supercomputers like a Man Group. I can't afford them. You can't afford, or Winton Capital. Okay, we're going to trend follow in a more simplistic way, which is fine. It'll make us enough. It'll make us the money, and it's perfectly fine. It's what I talk about when I do this stuff on TV or wherever else I'm doing it. We are going to be that person. We're just going to get onto a trend, maybe a little bit later than we could have done. Fine. It'll be enough. It'll make us a living. So I said to Bill, well, how are we going to do that? How on earth are we going to get onto those trends? And because I said, look, I'm a poor student. I can't afford complicated, expensive software, which is why to this day, when I'm speaking to retail clients, it's not just because in my books, they were all for retail clients. It's because I know how it is to be a retail client. You can't afford expensive software, which is why I love free software like this, which is broker independent. Any software from a broker I don't like, because I just don't like brokers, basically. I'm prejudiced against brokers. This, by the way, is Disney. And we'll come to these trades in a moment. Disney, I like as a company, but it's really not been doing great this year. And then all of a sudden yesterday, it's gone up about $5. Not yesterday, sorry, since this month, June. Okay, so this month it's gone up about 5% so far this month, already in the first week of this month. And it might be because Apple are going to buy, I don't know. But what it is that the trend has followed. You can see the smoothness, and that's my job. My one job to teach my students is not where to put the stop loss, because the software shows that. It's not where to add to winners. And the entry I'll show you in a second, which Bill taught me. How do you know when to enter? My one job is for them just simply to use the fantastic, intelligent neural networks in their head, called their brain, to look at when the trends are smoother, just things where it's moving pretty smoothly as it is there, and latch onto those. The entry signals are a bit like a Ferrari. If you take it up a mountain, i.e. very volatile trades, you're going to crash and burn. If you take it down a smooth road, like something like this, it's easier to get onto trends, of course. Okay, so that's where we are with Disney. If somebody said to me, what do you think about Disney? I'll say, well, we're long it at the moment on the trades. Similarly, by the way, if they said, what do you think about Google? And people have this morning, there's a what's your view on Google? I'm worried, blah, blah, blah. And I said, well, we're short it on the short term, on the 30-minute bars. That's all I can tell you. What else do you want me to tell you? Well, should I hold it? Shouldn't I? Well, short-term trading, no. Long-term investing, yeah, they're two different things. So simple. People do overcomplicate things. So how are we going to know when to get into an entry? That's the final part of the webinar, and then we'll do the Q&A. Okay, and we'll talk about brokers in that. How do we know when to get into a trade? And Bill said to me, you're going to measure how close the price closes to the high. It's a bit like those auctions. I've got 50, anybody give me 60. I've got 60, anybody give me 70, 70, anybody give me 80. That's momentum. And I said to him, yeah, how am I going to do this? What, with a freaking magnifying glass? And how am I going to do it across so many instruments? I won't have the time and energy. And he said, no, you're a poor student. So what we'll do is we'll do what all hedge funds do, which is, because there are multiple ways of measuring momentum, and therefore, when a trend's starting, you could measure higher lows, you could measure higher highs, you could measure is the price closing near the high. They're all different ways. So he said, what we'll do is, what all hedge funds do is they measure multiple things. They might not measure the same thing, like higher lows, higher highs, is the price closing near the high. They might use all sorts of other data, but they'll use multiple confirmations or multiple indicators. Okay, multiple indicators. What they'll all also do, because they'll filter, they'll say, do all those indicators. So have we got higher highs, higher lows, and is the price closing near the high? So they'll tick those 3 boxes. I'm giving those as an example. We actually look at more and different things, but as an example. Okay, and then they'll look at multiple timeframes. So in our case, and you can write this down, we look at the next time frame, not multiple as in 15 timeframes before and 15 after. So if you're trading the 30-minute bars, which if you've got a day job is ideal, or the 1-hour bars is ideal, and you place a trade in the morning because you saw the trend come up on one of the 12 to 20 instruments you were monitoring, then what you would do is you'd say, right, fine, I've got this, okay, as a buy, multiple indicators, but in the next time frame along, so I'm 30-minute bars, the 1 hour, it's also got higher lows, higher highs, and the price is closing near the high. So you check that multiple indicators on the next time frame. And all hedge funds, whatever their multiple indicators are that they're choosing, they filter. They don't just look at one thing, they look at multiple things. I train as a lawyer. We call it corroborative evidence. You don't just look at one thing, you corroborate across different. And only if we all filter. Why? So you get a purer trade. It takes out all the crappier trades. Doesn't guarantee you'll always win. Of course, there are no guarantees in the markets. But by taking out those poorer trades, it's filtering. Okay, so multiple indicators, multiple time frames to filter, to purify the trades, to make sure you've taken out the rubbish ones. You might take out a lot of potentially good ones, but I don't care. It's more important to take out the bad ones along with the good ones and be left with a few good ones than to have a lot of good ones and some bad ones. Got it? You want to purify as much as possible, even if you're throwing a lot of the baby out with the bathwater. And number 3 is PC and PR, which I'll come to in a second. So I still said to him, well, this still raises a problem. How the hell do I do this? I'm a poor student. I need free software to do it, and I need to know how to do it. And he said, okay, we're going to use indicators which are already out there, but because they don't work, in the sense that they're not accurate enough, we're going to use multiple indicators, but not the way the textbooks do. Because once I did this and somebody said, oh, but you're only using indicators which are out there. And I said, no, you're wrong. What we're doing is we're using multiple indicators, but not the way the textbooks do. And we're using multiple to filter. So they all have to say yes, yes, yes. And we're doing more than that in actual fact. So let's take something like the MACD. We look to see, is it flat to rising? That's a measure of, is the price closing near its highs? Higher lows, higher highs. Is it flat to rising? Because it's a laggard, we just look to see, is it flat to rising? So not a way in which the textbooks use it. And then we look at it in the next time frame and the stochastic and the RSI. And we don't just do that, we do something else as well. So with multiple indicators, multiple time frames, tick, 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 because I was a poor student. So the first strategy we had in the hedge fund, very simple, but we did something else which was essential and revolutionary. PR and PC, and I'll explain what that is. So flat to rising, multiple indicators, multiple time frames, and we just get the computer to do it. We used to have to do this manually. Okay, PC is this, price confirmation. Whichever time frame you're trading on, it has to be a 2-period high. I don't figure in volume. I could look at a multiple amount of stuff. Some of my students do. They'll add their own things to it. And they'll say, well, actually, Alpesh, I'm going to filter on everything you've done, but I'm also going to add volume or moving averages or Fibonacci or Elliott waves. Entirely up to them. And they say, I prefer it that way. And I say, that's fine. That's great. And they do rather well out of it. So it's a bit like if I take a car, let's say I buy a Ford Escort and I say, well, I'm going to change the wheels. These wheels are better, or the steering wheel. Yeah, you can customize it. And I drive it better. That's fine. I love that. But it's still the same essential car. As long as you don't change the essentials, like if you start adding to losers and don't add to winners, then I'll say, well, that's not the car I gave you. But if you just simply add a moving average overlay, I'll go, yeah, fine. Okay, and that's the way to look at it. It's like you've added leather seats and got rid of the lovely plastic PVC ones that it comes with a Ford Escort. So there you go. That's the 2-period high. That's price confirmation. The other thing we do, and this is up to us, and we use, I was looking at Microsoft Azure yesterday, actually. We use Microsoft Azure virtual machines to do some sort of AI pattern recognition for us. AI is all the vogue now, but I've been saying it for a while. And it takes patterns from the previous 14 periods, and it has a library of them, and it looks to see how much of a close match are those patterns. It's pattern recognition. How close a match are those patterns to when the price last moved? So if there's a pattern match and we had multiple indicators, multiple time frames, price confirmation, and the pattern matched as well to when we last had a massive move like this, then we just go mental. We have a party in the office. No, we don't. We just, it's an added thing. You don't need the pattern recognition part, but that's what we do. You can reverse engineer everything else I've told you, multiple indicators, flat to rising, multiple timeframes, price confirmation. You can't obviously reverse engineer the AI bit, the pattern recognition, but you don't need to. Don't worry about it. You'll be fine. Okay. That's a whole bunch of students we had at a talk at Bloomberg I gave. And this was interesting. We had students, which I think you are, Jaden. We had full-time moms, which was interesting, full-time plumbers, full professional traders, school teachers, in between jobbers. We had NHS nurses. I think we had one, I'd say nurses. I should probably say nurse because I only met the one. And somebody from the armed forces. Business owners is very common. Side gig entrepreneurs is very common. And retirees is very, very, very common. These were the sort of, this side is what you get a lot of. This is slightly less so. I mean, you don't get that many teachers. You get one or two usually with these things because they're academics. So they're good at learning. I, at university, perfected my strategy, read Carnation, last exam, perfected the strategy, won awards, including front cover of the business section of the Financial Times. By the way, I'm at an event with John Lee at the Financial Times next week, actually, June 15th. It's on my, I'll give you the link in a second. It's on my Telegram channel anyway. So I won those, and then the FT said, well, would you like to write books on this? You're rather good at it. So I wrote quite a few books with the Financial Times to raise my profile, which helps in capital raising. Asset management is about capital raising. It's not about trading strategies. If you want trading strategies, you just got mine off a webinar. You can go to Oxford University Maths Department and get loads. The rare, scarce resource is capital raising. So I wrote the books and won the competitions. By the way, look at that numpty who was rubbish at number 14, Neil Woodford. He raised billions. Absolute billions. Okay, there's a story in the Financial Times today about Crispin Odey and what an odious character, sexual predator he is. And the Financial Times admitted that they, built him up, just like they built up Kathy Wood and Neil Woodford. Must be something with the word wood or ode. Anyway, Merrill Lynch, HSBC, together with American Express and a few others, licensed the software. They paid me about $1 million, which is what it cost to set up the hedge fund, because you've got the lawyers, the accountants, the auditors, and all the rest of it, and the asset management company, the office rent. You've got to have, at that time, we had a Cayman company, so Cayman lawyers, Irish Stock Exchange listing, and a UK asset management company, and auditors, different sets of lawyers in every jurisdiction. Absolutely bloody extortion. To be honest, I wish I just kept the money actually sometimes and didn't have to have all the early morning wake ups to go capital raising. And the FT profile. What's this is the most important slide. What's the most important time frame? Well, we gave our traders some of these and said, look, you pick whatever instruments you want, whatever time frames. The 1 hour time frame turned out to be the most efficient. Doesn't mean you shouldn't do the others, but most efficient. Number of trades in a month, 25 typically, but some months they might do as many as 40. And other months as few as 17, for instance, because they just didn't get the signals, or they thought, nah, I don't like it. Net pips captured, winning minus losing points or pips, 2,250. Let's say you did a whopping $2 a point. You shouldn't, okay? Any broker or software provider who says to you, do a pound a point or 2 or 3, they're usually also going to say, and here's a subscription, and here's a broker you should do it with, because they're getting a kickback on the subscription, and they're getting a kickback from the broker. That's why they want you to do £1 a point, because it's quite big and you can lose a lot. But I'm going to show you why you shouldn't do $2 in this case per point, or even 1. $2 a point would mean in a month you captured 2,250 net pips captured. Now, that could be in a good month as much as 4,000. And in a bad month, that could be negative or 0. In other words, the good month you keep the money, and the bad months for the bad month, so that you can iron it out to get to that 500 a month. But $2 times 2,250 net pips, winning minus losing captured, would mean that you've made $4,500 in a month. Remember what I said? We are looking at 500 a month. So we don't need to do $2 a point. We can do 20 cents a point. 20 cents a point or a pip. That's when we knew we had the Google of trading. We had something which was mass market, because 20 cents would mean you could still hit your target of 500 a month and not have massive losses, because your typical loss would then be £10 or $10 on a trade. Far more reasonable. $10 loss, which a broker never wants you to have. They want you to have a $100 loss, okay? Which is why they say to you, do a pound a point. No, don't listen to brokers. And you're still hitting your 500. You see why I prefer you walk slowly? Because I care more about, I don't want you to lose money. I don't care about how much you make. I don't want you to lose it. And that's why we say demo account first. Okay. So a chap at Barclays Bank said to me, why don't you spin out this training software that you've got? And I said, no, because I've seen the crap that's out there and I don't want to be associated with these trading universities, trading academies, trading colleges, because they leave you after a weekend, they charge you a bloody fortune and they're crap. And it could be reputationally bad for the brand. And he said, well, actually, no, because why don't you do it differently? Why don't you say there is no subscription charge? The data is live, real time and free forever. All upgrades are free forever. They get access to you forever through Zoom calls, personal meetings, all the rest of it. There's no hotel cost, no travel cost, ongoing support forever, upgrades forever. Okay. And I said, okay, that's a different way of doing it. And he called it, so Biku at Barclays Bank called it pipspredator. It was his idea, is his name. And he said, we at Barclays will IPO it in due course. We'll help you with the corporate finance to raise venture capital. And I'll tell you about all this in a second and what our plans are. Buy when the price goes above the horizontal line, because that confirms price momentum, odds have moved in your favor. In other words, and you can get an alert on your phone if you really want. I'd rather you didn't. I'd rather you had a better life than just checking your phone every 2 minutes like a social media addict and the mental illness that causes. I'd rather you place the trades and then you did something more useful with your life. Okay? Because it'll make you a better trader, as the traders in this told me. The floor traders leave by 11. Because if they've made money, they get arrogant and then lose it by overtrading, low quality trades. And if they've lost it, then they revenge trade and lose even more by frustrated trading. So I don't want you to do either. Okay. You walk away, tomorrow's another day. Now, we called it pipspredator. Can you make money? I'll show you some more trades in a second. Is it easy? Yeah, we give a manual. We give access to me. The reason we give access to me is very simple. We wanted a way of differentiating us from all the scumbags that were out there. And we thought, you know what? The best way is, if people know you're giving a warranty that they're going to have access to you, they know the only way you're going to do that is if they don't actually need to keep calling you. And they don't need to ever keep calling you if they're profitable. And I said, perfect. So I'm putting my name and time and reputation on the neck, on the line, by saying you can have access to me. And that nobody else does. So the other companies, they'll have some kind of, low ranking person on £5 an hour. And they'll say, yeah, you got access to the head of trading, give them some big title. Can I do it anytime with a day job? Yep, that's the whole point. How much does it make? Well, I'll show you that in a second. Does it make life easier? Hell yeah. And the checklist, there's a manual. We then created, and this was Biku's idea. He said, well, what if you've got a whole bunch of people who actually want to then go into finance, or parents want to get it for their children? So he was looking at all these market segments, because at Barclays, they want to do the corporate finance deal. And he said, well, why not create a program alongside the software, 12-week program for those who want to do it, just include it, throw it in. I said, yeah, we've got the training materials anyway. I've got 18 books of training materials, which I can create into videos. And I loved it. And the reason I wanted to get into the software business is the same reason I copied billionaires. Anything I do in life, I said, where are the billionaires hanging out at? Oh, hedge funds, right, I'll do a hedge fund. So Jeff Bezos, hedge fund manager, left and set up a software business, Amazon. So I thought, yeah, software, because it's got a 99% profit margin as software. It's phenomenal. It's not 99%, it's probably closer to about 90. Are there checklists and simple rules? And this was Biku from Barclays Bank. These were some of his first trades. So full disclosure, not mine. Now, he did 5-minute bars and I told him not to. Short down there, and he would send them to me. And this is after he'd made some profits, which is why he's doing such large size. So he started off like everybody else, 20 cents per point or pip, and then gradually made a bit more money, and it helped you as a banker, so he had a bit of money anyway, and then built it up. So you build it up with the profits. Now, you might say you're being overly cautious. Why don't you let them just start off? Well, I don't want them to start off with that, because what if they get it wrong? So he had to start like everybody else on a demo with whichever broker he wanted. I can't remember which brokers he chose. You can choose your own broker. We just make sure, are they FCA regulated? Yeah, then it's fine. Similarly, this is another one of his going in at the higher clips. And that's where he's kept it. I don't think he's gone higher than that, and it's probably sensible not to, because it doesn't matter how rich you are at the end. If money's still money, I mean, even a billionaire, $2,000 is still $2,000. This is where we got some of the best endorsements, and that's why we thought, you know what, we've got to convert what we learned from the leading traders in the world into the software. And this was Biku's idea at Barclays as well. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. So we took the methodologies of successful trading strategies and we put it into this. I'll give it in a second, just 1 second if you want to use it. So we took those strategies, multiple indicators, multiple time frames, flat to rising, winners add to winners, losers add to winners, losers. We took the rules of Selma, basically. So I took what the leading traders told me, converted it into calling it Selma, and then programmed it into software. And that's from the chairman of the Chicago Board of Trade. So clearly elucidating the methodology of successful trading strategies. We had to get those kinds of endorsements. And we had a whole bunch of others from hedge fund managers, floor traders, the head of, where's he gone? He's over here somewhere. There was chairman of Life, Prudential, Mark Slater, former Merrill Lynch head of currency trading UK. Mark Slater, there's two Mark Slaters in finance. This is the one you've not heard of, who said that. He's the one at Merrill Lynch. We got this great review 2 days ago, June the 5th, or a couple of days ago. And he said, again, thank you so much for providing this to the public. Honestly changed my life. It's from Kieran. And I thought, you know what, I'm going to show that. And that's the point. That's what we're trying to get to. What we found is that the reviews were so bloody good, we interviewed them on video because we thought, you know what, these are too good not to video. And if you look at these, this is on alpeshpatelreviews.com. Have a look at Ario. He's probably the most successful one we've had. He created two $10 million companies. There are others, you know, done 100% and so on, but he's probably, and his video is phenomenal. And he's so very grateful about it all, and which embarrasses me because I don't want him to be grateful. He did the hard work. I just want him to get on with it. That's an outlier because not everyone's going to have $10 million companies, obviously, because it depends on personal circumstances. Some people say I'm too busy to trade. Okay. You know, it's just like saying, oh, look, I saw surgeons are really rich. Let me be a surgeon. Doesn't mean you're going to be rich. Okay. So it just depends on the individual and their ability to pick up skills. This is what the whole point of it is. It's to convert it into that. So you can do it manually. You've learned the rules, stop losses, entries, limit orders, mind, multiple indicators, winners add to winners, and all the rest of it. My ambition with Barclays is, and I'm going to show you a bit more, is to turn this into $1 billion company. To IPO it, before that, we're going to get venture capital at probably a 30 million valuation. To do that, we need about 1,000 students on board. We've got about 850 on board, and I take them in batches of 15. There's no subscriptions. There's no ongoing charges. It's yours for life. All upgrades included. Access to me is included. In-person meetings. We do events every month now as well. All daily updates are included. The 12-week course, the software, all of that. Because that's our ambition, to convert this software company. And just like when Apple does their launch, Steve Jobs used to come on stage. This is my launch. I come on stage and say, we're on version 4 of the indicator now. We've got about 850 students. The first 1,000 will always have me as their mentor. They'll be the charter members, as it were. And it's not yours for just 7 days or trial for 14 or 21. It's full 30 days, and there's no ongoing subscriptions. It's just one-off, and all upgrades and updates are free. That's what Bhikkhu originally said when he was still at Barclays. Okay, he's left there now, and I'm going to show you what he does now. I love the pipspredator. I now spend most of my time trading and love that as a novice. I know what to trade, when, how much, and can leave and exit and get on with my other work. And I met up with him again last week. That's him last week in Dubai. It's been over 5 years now, and I can say without a shadow of a doubt, without pipspredator, I would not have been able to move to Dubai, leave my job at Barclays. It's life-changing. I should mention he's also a friend. I mean, no kidding, is a friend. I like to say all my students are a friend as well. So I should disclose he's also now a friend. He wasn't initially, it was just a professional relationship when we first met. But like so many of my students, they've gone on to become friends as well, because you're meeting people almost every month. I do this in batches of 15 licenses at a time. Like I say, you can do it all manually if you wish. I mean, it's entirely up to you. I would say the 10% who have the software on the program are the ones who allow us to give all the free education to the 90% who are sort of state educated. So you've got the private education, state education is one way of looking at it. And you've got 30 days. By the way, in those 30 days, for doing me the honor of trialing it, you also get signed copies of my 2 most recent books, a trading journal, some earphones to listen to all the programs and course material and everything else. So you get all of that. And this is the same software that I use when I'm talking on the BBC about the markets and which way I think it's going. And this was great because there was a clip where Sally actually said, oh yeah, I remember that. You got that right with oil. And I was like, great, I'm keeping that as a clip as well. What I also do is we have a little community site as well now. We have it on Facebook as well as on here, where people can ask questions and I answer those. And even more exciting than that, we have the fantastic 12-week course as well. So as well as the software, and you have Zoom calls with me as often as you want. We actually also have a co-founder of another hedge fund, chap called Paresh Kuri, who's co-author of my books with me and was a floor trader on Life. He also mentors alongside me. So you actually get 2 mentors now for the price of 1. And the course is structured. You don't have to do the course. Some people just download the software and use the manual. But if you did want to download if you did want to do the course, it'd be great, because we've had 1 or 2 who want to go into finance. They get it for their kids, and the kids want to go into finance. It's a good way to learn. They get my name on their CV and LinkedIn as their mentor, and so on. They get a certificate. Week 1, week 2, it's there. You've got your whole life to do it. You don't have to do it. You don't have to complete it. But that's for those who really want to learn about trading. I get some saying, you know what, I'm going to dig into this. I really want to do this. And they email me with questions. We even create a WhatsApp group for them. We have a separate private Telegram channel. So we do a hell of a lot. I think we've got about £10,000 worth of, actually, no, £100,000 worth of value. And I'm going to show you why I think it's £100,000 worth of value in all of that in a second. So if you do want to, it is first come, first serve. And we pretty much always sell out on whenever I do a webinar. And I only do webinars if my secretary says I've got less than 3 emails in a day. Because otherwise she'll say you're busy with the existing group, and you're still apprentices for life. But we take them in batches of 15 when I feel, okay, that batch is doing fine alone. They're not needing to contact me. Let's bring on a next batch as well, or next cohort, as it were. Now we do it as low as just you can do in installments. There's no ongoing subscriptions. All upgrades are included. The ambition is to get 1,000 people, and then, and this won't affect you guys, once we get past 1,000, is have a subscription model, because that's what the venture capitalists want. I don't, but for the first 1,000, it won't affect you. Yours is just a one-off. And we've increased prices 3 times now. They're going to go up again this year just because of demand and the amount of money people are making. If they're making money, I think it's only fair we charge more for it. But those are the rates. They're fixed for you guys anyway. But the plan is eventually there'll be a separate for mentoring, separate for the software, not for you. You guys are part of the first 1,000, so it wouldn't ever affect you. But I'm saying in future, those are the plans. And then eventually to get venture capital at a valuation of about 30 million, probably 30% of the company for 30 million, use that money to go global. We've already got people from all around the world on this. It is first come, first serve. And Judy can even install the indicator on you. We've got a whole big team who can help. And help with, we're short at the moment, the S&P 500, as you can see there, after a massive long trade, which was great. And when the trades go flat, they're flat. It doesn't matter. That's short at the moment, and that's working out all right. And calm, relax, able to do a webinar whilst having those trades open. Why? Well, because we've got the instruments to tell us. I don't need to be panicked and worrying over it. Okay. What is site for strategy? There it is, Omar. There's the site. Econ at Loughborough. I know Loughborough very well, actually, Jaden. Not the university, but I know the town on there as well. And what we also do is I give webinars on Saturdays, 6 on Saturdays, actually. So you've got lots of ways of connecting with me, as well as the program. You've got, and by the way, you get to keep the books and the trading journal for free, no matter what, because you've just tried this, just for trialing it out as well. You also get, as well as part of the sort of trading club, which is now in person as well as virtual as well. You also get this live webinars each Saturday from 11 a.m. till 4. You don't have to stay for those. You don't have to do them. It's just another way of contact. I wanted people to be always have access to me, whether it was through email, Zoom calls, Google Meet calls, in-person events, which we have each month in the Strand, or through other events like I have them in Parliament coming up on June the 23rd, morning of, for new sign-ups. If they want to come along to that, it's a tech event that I'm moderating. So I try and invite them to all of those things, because I believe in 360-degree mentoring. I'll be their mentor, but I want to mentor them in career, finance, business, open doors. And that's why I always say to them, join me on LinkedIn, connect with me on my LinkedIn. Let me just show you the LinkedIn. And I think you'll agree, that's a hell of a lot that they're getting. I want to be in one of these 2 lists. Okay, that's as simple as that. Why? Well, I'm a teetotal vegetarian. It's not because I need the money. What am I going to spend it on? It's not going to be on wine, women, and booze, is it? It's just something to do, isn't it? And we figured that we'd be stupid not to do it. When you get credentials like this, and people saying such wonderful things about the work that you've done, you think to yourself, you know what, it would be stupid not to shoot for the stars. And that's what this is. It's $1 billion tech company play. That's exactly what it is, and it should be as well. And not just those people, reviews and case studies, and you can see all of those. But actually, look, that's Edmund de Rothschilds. That's the vice president and what they're saying there. Or members of government, that's Coutts, Barclays Wealth, CMC, TD Waterhouse, City Index. You know, when you've got credentials. And that's why I say to people, in an area where there just aren't anybody with credentials like we have, it would be stupid for us not to own the place and just be a monopoly in it, which is what our ambition is. Like any big company, you want ambition to be a monopoly, subject to the laws, but it'd be a nice problem to have. So join me on LinkedIn as well. I said to my students, if you're one of the students who are signing up today, okay, then oops, and there's a few that have just come on. If you're one of the ones who are signing up, then let me know and I'll give you a shout out. For someone who has had a demo account with good Santi, I think you're on the program, right? You look to start with real money. Other main brokers would recommend that start with low pounds per pips. I'd normally say go with the straight through processes like InterTrader as well, but compare them alongside, say, an IG, and then place the same trades on both with the smallest amounts and see what happens, and see which you prefer. And it's the best way to do it. Havinder, best way to use software, enter trade and wait for an opposing signal. That's actually something which a lot of my students do. It's not part of the official way, Havinder, but it is. A new trade, or enter the signal and wait until the software indicates run out of momentum and then wait for the entry signal. I'd probably say wait for the opposite signal. It's not part of our official strategy, only because I didn't think of it. One of the other students said this works out even better. And this is what I love. It's almost like we're crowd utilizing their intel. But yeah, for a lot of students prefer just waiting for the reverse if they're going to be in front of the computer. If they're not, then they'll just use the trading stop loss. And that's even better for them. So thank you all who've signed up. Does it work on a Mac? Yes, indeed. We give you full installation instructions, or Judy or Paresh can install it for you. I said to people, if it takes more than 10 minutes to install, we'll just do it for you. Okay. And I use it on a Mac as well as a Windows PC, by the way, just so you know. Okay. I use both. By the way, I'll answer some more of the questions you've got just through taking you through this. So, and we get lots of great comments from the students. You can see it on alpeshpatelreviews.com. Reviews from both institutional people and just regular folks. And we did video interviews because we thought, you know what, we need to blow away the crap reviews other people have on their stuff as well. Total value, difficult to say what it is. These are the countries from where we have most of the people, obviously UK, EU, and so on as well. I do it actually at the moment, it's not 25, it's going to be 15 at a time. And that'll turn to blocked if I'm going to be too busy. Like all of last week, actually last 2 weeks, that was always red because I was just too busy. So I didn't take on new ones. I just kept with the ones that I was doing as well. So you got all of this stuff which is in there. We wanted to create what was probably the best, most supportive training tool. And because we spun it out of the hedge fund, we knew it already works because we use it on our own staff. We use it with our own business. As well. And people said, well, doesn't that mean I could front run your trades? And I'd say, well, no, because it's trend following. So you'd actually be adding volume to the trades I'm doing. And if you did the opposite, you'll just get run over by the market. So duh. So there you go. Lifetime entry. We think that's at least $10,000 value. 30-day course. That's more for the 30-day course is more if you really want to become a hedge fund manager, which I'd say 10% of the students that I have are in that. Most aren't. They're just happy doing what they're doing and they just want to earn a bit. We've got a WhatsApp for personal one-to-one and a group Telegram. So we do both WhatsApp one-to-one and group, and obviously Zoom calls and Google Meets, whatever you want, with a whole bunch of trading plans and all of this. And because you've got direct access to me, and my job is to always be responsive, because guess what's the best thing in the world for any software company? It is word of mouth. So I've got an incentive to make sure that you're bloody happy as well. And my interests are aligned with yours. It's as simple as that. Past and present clients, and Merrill Lynch HSBC did a JV, and I was the front page of that because, well, when it works, it works. It was as simple as that. Let me know, Jaden, what application broker would you say is the best when it comes to initially starting to open your practice account? I always tell my students, we on the download page, Jaden, have about 5 or 6 where we actually know the broker. So if ever you have any problems, so I'd say open it with several of those and see which you like. It's very much like if I gave you 3 different cars to drive and said, I can't say to you which one's best when it comes down to, well, you might say that one's better than that one. But what we've done is all of them are good, i.e. they won't rip you off. And one way we know they won't rip you off is because they're scared to hell of us. I mean, we would kill them on social media if they ever were bad to our students. So there's a whole bunch there. Plus, if you said IG, for instance, I know the guys at IG. I know they spike the prices sometimes, but they're not going to steal your money. But I'd rather you tested them with an Intertrader, for instance, who I know they're a good bunch. I used to say ETX, but then they closed down. So some of the good ones closed down. ETX were actually being too honest is the problem. They weren't ripping their clients off enough. We used to send loads of people to them. So they weren't price gouging enough, which is good that they weren't. We didn't want them to, but I'm saying it also put them out of business. So, there you go. So frequently asked questions. Do I have to pay for updates? No. How long is the contract? There isn't. There's no ongoing subscription. Okay, if I need to install, can I speak to someone? Yep, Judy and Paresh and Francisco. Where do I get the time to mentor? Guess what? When people are profitable, they don't need to. Plus, it's my baby. I've got a potential billion-dollar company. You don't think I'm going to make the time to speak to clients? Of course I bloody well am. The hidden secret CEO, I guess you could call it. How much can I make? Depends on how frequently you trade and how much capital you start off with, but we can make a bespoke business plan. Can I use that on Mac? Yes. Is there a manual? Hell yes, there is. Why do you limit to 25? Because I'm doing the mentoring. Are there any other costs? None at all. How do I know what to trade, timeframes, and how much risk? Well, we tell you that because every day on Telegram, we'll tell you which ones we're watching. And you can just email us equally on top if you didn't even want to look at Telegram for that. How are the students performing? Look at alpeshpatelreviews.com. And I'll show you actually how they're performing in just 1 second. Can I have a receipt invoice? Of course. It's VAT registered. If you're in the UK, you can get your VAT back if you have a company. Does it have alerts? Yeah, but I'd rather you didn't use alerts. I'd rather you just placed the trade and left and walked on there. So we might have run out, actually. Sorry, we might be out. FXCM, Peter, I don't mind FXCM, actually. But see if you like the platform. You might not like it. I've never had a problem with them. So, yeah. Intertrader, as I said, is straight through processing, and I like the guys there. I like the guys at Tickmill, for instance. Okay, because when Paresh vets them or meets them and all the rest of it, we have a simple rule. We have to have met the CEO. We have to have met senior management. We have to have a direct line to them. So if any of our students ever have a question, we're able to pick up the phone and go, what's going on? Okay, it's got to be those things. Otherwise, we just won't deal with the broker. But you can have your own broker. You don't have to use any of the ones we've gone through at all. You take the signal and you do it. Okay, so this is all a bit more of the stuff. I'm going to show you the students and how they're doing in just a second. Okay. This was how we compare with everyone else, and this was part of what I said to Biku. If we're going to create a company which could be huge as a software company, it's got to be one which can tick all the boxes that others can't. It had to be that good. Okay, so it's that simple. And we do, and I'll just show you. So you're going to be my apprentice. Just copy billionaires. You might not like either of these individuals, I'm afraid, as well. That's roughly, it's not guaranteed every time, how it starts. Week 1, we might get one dropout, and you probably start, let's say you download the software this afternoon and you're talking to me later today. About 25 of you will be instantly profitable because you've traded before. You know what you're doing. If you're my wife, you wouldn't be because you've never done it before. Okay. And you might look at the DAX and, you start making money or whatever else. You look at euro, US dollar, and, the trade's going well. As we said, it was going well. It's going up. Somebody earlier said that they often reverse. Well, not at the moment. And if it reverses, we'll sell out then, won't we? So there we are with that one. And you might be profitable straight away. Okay. And I'd say roughly, when we've done the test before, about 20-25% on week 1 of that. By about week 12, about 90% are profitable. Okay, we'll have about 10% roughly drop out within the 30 days. 10% will say, and these are the most common reasons. Trading's not for me, family emergency, change of jobs, move country. It's something like, won't have the time. Others will say, I don't have the time at the moment, but I'm buying into this, locking in the price, locking in the deal, and I'll come to it in a month. As Jaden, you just said, when my exams are over. KP, best alternative platform if I like IG. What do you mean as alternative? IG, CMC, Saxo, they're all fine. Like I said, Intertrader, Tickmill, interactive brokers. If you see, I say interactive brokers, some people they go, ugh, such an ugly platform, I hate it. And others say, whoa, I love it. Others say, IG is so user-friendly. Others say spreads are mental and they spike it in the middle of the night. Okay, yeah. Okay, that's the link, by the way, for the download of the books and all the freebies. Any other questions? If you want me to hold a spot, I can hold one. Let me know. Otherwise, they're all going to go. So let me know if you need me to hold it for 24 hours. Otherwise, they're all going to go anyway. Now, what else can I show you on here? So Amazon was a short and it's suddenly bumped up as the markets have, as the US markets have opened. So we'll see what happens. Now, that hits our trailing stop, that'll be automatically exited. And I didn't have to worry about it. You might say, oh, but Alpesh, you made less than you could have done. Yeah, that's fine. That's trading. That's life. I don't need to worry about it. I don't know. Maybe it's because as I get older, I want to worry less about stuff. But that's what happens. And it doesn't really bother me either way if we didn't make as much as we could have done. I'd rather have a quieter, more peaceful life. And it's as simple as that. Let's see if we've got anything else. No, everything else pretty much carrying on from before. Are there any spaces left? I want to try this out as my exams are going to be over. Oh, Santi, that's fine. I can hold one. I can hold one for you, Santi. I want to try this out. Yeah, absolutely. Actually, I didn't realize that quite a few people lose exams at the moment. Jaden, you mentioned it as well. I think there's all the students. I'll tell you, let's focus on the students. So we get people, they say, well, I'm in my 20s. I'm going to get you mentoring me for life, opening doors for me and, using your networks. And I say, yeah, that's perfectly fine. And that's the whole point of it. I don't think it should just be, oh, I'm only going to teach you trading. I'll say, well, I'll open up my networks if I can. I'll give you a reference because I know the work you'll have done and what you've learned. Help you get a job if I can. Whatever it is, come to my events in Parliament, join my network. They say your net worth is dependent on your networks. And sometimes we get parents doing that and saying, yeah, actually, I'd like him to be one of your students. And I can say to people, this is one of my students. This is what he does. I mean, I think that's fair enough. I think it's a fair exchange to say, well, we'll do that. And you'll be able to see the other stuff, the universe that I operate in, and you come along to stuff. And I like that. So Santi, that's fine. I'll hold one for you. But please try and sign up by tonight at the very latest. Any other questions I've missed, let me know. Thank you. John, Simon, Peter, Mike, Josh, Sammy, thank you. Steve, as well. Ted, thank you. Robert, I'll do that. Can talk to you this week. Okay, Robert, will you email me? I'll try and accommodate that. I always try and be accommodative. So I'll try and accommodate that. Don't worry. Okay. On that. So that's where we are. We also have, as I said, a dedicated site. As you can see, I think I went through. Did I go through this? No, I didn't go through this. So we have a dedicated site where you'll see the testimonials, pipspredator.com. You'll see the 12-week course. You see the mentoring. You see the testimonials. You see the software. All of that. So you'll find it all there, and all our social media as well. From, oh my God, Instagram, YouTube, Google+, Flickr. For God's sake, Flickr. Who uses that anymore? Whereas we've got Flickr. It's me talking at KPMG. It's me with the team at Number 10. It's me on the BBC. Yeah, I know. And so on and so forth. Me on Newsnight, talking about defense issues, bilateral foreign policy and defense. And yeah, Flickr's actually quite good. I didn't realize. Okay, guys. Oh, TikTok, I've got 160,000 followers. It's crazy on TikTok. You got my LinkedIn, my Twitter, my Facebook, as well, and WhatsApp. Okay. Oh, brilliant, Santi. Welcome on board. I'll do that. Oh, by the way, everybody who's signed up, you're going to get a personalized email from me. And by personalized, I don't just mean I write, Dear Santi. I mean, you'll get a video from me mentioning your name and personally welcoming you on board. And then all the ones who signed up today, when you email me back, let me know if you're free for my event in Parliament on June the 23rd. It's a breakfast meeting. It's a tech one, and I'm moderating. So if you want to come along, it'll be at the, I think it's House of Lords, might be the Commons. Anyway, on June the 23rd morning, and it'd be great to meet you there as well. So I'd always try and invite people along to things I'm doing. And then next week I've got an event at the Financial Times. So again, when I email you, please let me know if you want to come to those, and we'll make sure the invites get signed up. So thank you all very much. Right, listen, guys, I'm going to go now because the US markets have just opened, so I want to keep an eye on some of that stuff just for fun. My team will do it for me, even if I don't. But I enjoy this stuff still. I like playing the game, so I'm going to go out there and do that. So, okay, guys, thank you all very much. any questions you've got, just keep posting them, and I will speak to the apprentices in a second. Just give me about 30 minutes to send the emails out. Some of you will get it sooner. It's just that I want to check the markets, and then I get the emails out to you. Thank you all very much. Let me see, where are we? We're down there. Let me turn the screen off. Thank you all very much. Really appreciate it. And yeah, at market open, we've had, let's just see what the S&P, actually, it's not really done much. Microsoft, not really done much here. I'll just show it to you. So we are where we are. I mean, I wish it had jumped out. It had jumped up. I've made more money, but I can't force money onto it. So we've got the short trade on Microsoft, and it's gone up a little bit. It's come down a bit. And I suspect it's probably going to go lower. And I'll explain to students what these arrows here mean as well, and how you trade select. Okay, so we'll do all of that later as well. But thank you all for being on the webinar, especially because I think this was the most lucrative trade. And now the euro dollar's going at the highest point, actually, since the start of the webinar. It's right up there. So there you go. The gentleman who asked earlier, which was a great question, these often reverse. Yeah, you're right. They often reverse. But did I need to worry about that? No. Was I calm? Yes. Did I need to know why it moved? No. Did we make money? Yeah, because it didn't reverse. Well, it did a little bit and then went back up, but we were fine because we just went with the algorithm and the trend. And the software allowed us to do that. So it removed all these pressures that I used to have in my life before when I first started in 2004, and it was just me, which was, oh my God, what now? Well, it's going to go back. And it was like a proper sort of panic stations. Now it's just like, yeah, no, it hasn't. And if it does, we would have gone short, but we didn't need to because it's going in the right direction. So thank you all for making money. I will make sure whatever profits we made on that deal, I share it with all of you on the webinar. I'm only kidding. That ain't going to happen. Thanks, everyone. Okay, bye all.